I didn't know how.
Okay, good afternoon, everybody. It is high noon, and thank you for joining us today for the Tax Review Commission. I'd like to start the meeting by taking roll call. My name is Beth Feasting. I'm the chair. Murray?
Murray Clay here.
Scott?
Yes, I'm present.
Thank you. Alton?
Present.
Sale?
Here.
And we have new member Winston Wong. Welcome, Winston.
Aloha and present.
Thank you for joining us. Also, as we get started this afternoon, I want to let you know that the Commission will not be taking up agenda items 5 and 8 at today's meeting. So item 5 was information about permitted interaction group. We will not be getting a presentation on that, but if anybody has any questions, please feel free to ask them, or you can send email to staff after the meeting if you have any questions about it. I think that the information that we were sent was pretty straightforward and probably doesn't require a lot of additional information. So moving on to public testimony, I want to acknowledge that we got public testimony from Tom Yamachika about taxing transportation. And I'd also like to ask at this time if Director Choi can join us again on screen and let us know. At the last meeting, we talked about legislative appropriation to support the needs of the Tax Review Commission. Could you tell us how that came out, and if funded, what we can use the funding for?
Okay, so the Tax Review Commission was funded in the amount of $250,000, and you can use it for party events and drinking.
Right.
Seth, can you help me on that? You can use it for research and travel and things like that, but Seth, can you help me on what they can use the money for?
You know, the best person to answer that is probably Ted, who is also on the call.
Oh,
Ted,
okay.
would you mind taking that question for me? I can. I
Sure.
think you're.
Sure. This is Ted Shiraishi. Yeah, so the appropriation was for a consultant. So in the past, for the past commissions, we hired an outside consultant to perform studies at the commission's request. So that would be the general thing, but I think other administrative costs would probably be allowed as well. This year, it seems like we're going to do a lot of it with Zoom. So I don't know how much other types of administrative costs, such as travel, we're going to need to incur for the commission. So yeah, that's the past. But I think as we go along, if there's other things that come up, we can discuss as whether or not it'd be an allowable expense. But the main portion of that was for getting outside help to perform any studies.
Well, it's really great to have that resource available to us. And I'm also hoping that sometime this year we will be able to get together for a face-to-face meeting, and perhaps we could use a little bit of that money to get Scott from Maui to go to a meeting.
Sure. Yeah. So we'll cross that bridge when we get to it. And I think those kind of things were allowable in the past, and I don't see why it would be not allowable going forward.
Great. Thank you. So is there anybody present who would like to provide public testimony at today's meeting? Okay, hearing none. Let's move on to the approval of the minutes of April 15th. Any corrections or additions?
Just a comment, Chair. I know the last meeting, Director Choi had mentioned that we had a new member. I wasn't sure if that's a big deal not being on the minutes, but I don't have anything other than that.
Oh, okay, thank you. Well, we do have our new member here today,
Yeah.
Winston Wong. I don't know whether, I can't remember whether we all introduced ourselves a little bit, but maybe we should take a step back and introduce ourselves to our new member, and also ask him to introduce himself a little bit. I go by the name Beth, although it says Elizabeth on the screen. I'm the chair of the Tax Review Commission, and in real life, I'm the director of the Hawaii Budget and Policy Center, which is a nonprofit program that's part of Hawaii Appleseed. And our vice chair is Alton Miyashiro. Alton?
Yeah, I'm I guess, a retired CPA, although I still work for my former firm on a part-time consulting basis. I've been at it for over 40 years, and I hate to say that I know Isaac for over 60 years.
Whoa. Well, I can tell you're not really retired because of your background there.
Yeah, it's a picture.
Yes. Sale?
Oh yeah, hi. Seo Hiroshima, Vice President Controller, Hawaiian Airlines. Background, CPA out of PricewaterhouseCoopers. I did time at FHB, First Hawaiian, and Par Pacific.
Thank you. Murray?
Murray Clay, I'm the president of Ulupono Initiative, which is an impact investing firm that works on increasing Hawaii's local food production, renewable energy production, clean transportation, and then better management of fresh water and waste. I've been in impact investing and private equity for about 18 years, and prior to that, I was in the military as an intelligence officer.
And Scott?
Hey, Winston. My name is Scott Teruya. I'm actually currently the current finance director under Mayor Victorino. I'm the former tax assessor from Maui County. I'm a licensed appraiser in the state of Hawaii, and no CPA background by all means.
So it's to you, Winston. Give us your best introduction.
Great. Thank you all for having me and for welcoming me here. My name is Winston Wong, as that's been said. I work for Chunker LLP. I'm a tax associate here. I work mostly under Ray Kamikawa, former director of taxation. So I do a lot of tax work for him, as well as some litigation. So I've been here for about 3 years. I worked at another firm, Rushmore LLP, prior to that, and immediately coming out of law school at Richardson at UH. My background in accounting, I got my master's and bachelor's from the University of Denver in accounting, and went through the CPA exam and all of that, but not practicing at this time.
Okay, well, thank you. And again, welcome. And all of the materials from our past meetings are on the website, of course. So when you get an opportunity to review those, it'd probably help you get up to speed.
Great.
So-
I have been able to follow a few of the meetings based on what's online. So you all look and sound very familiar.
Okay, good. Yeah, that makes a difference when we're all online and you can see us. But let's go back to the minutes of April 15th. Thank you for pointing that out, Scott. And are there any other corrections?
I've gone over the many minutes, and I'd make a motion to approve.
Okay, can I have a second?
Second.
Second.
Okay, let's go with Alton for the second. All in favor?
Aye.
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 Any opposed? Okay, minutes approved. So item number 4, commission members' communications with stakeholders. Has anybody had any meetings with stakeholders outside of our regular get-togethers? Okay, then we will move on. Item 5 is out, and so we're on to presentation on the tax burden by income group of state and federal taxes. So Seth, I'm assuming that is where you take over.
That's me. So I'm gonna take over. 1 second. So you guys can see the screen all right?
Yes.
Perfect. Okay, so just, this is going to be very quick. You guys had requested two things. Well, you actually requested three, and one of them we're not quite ready yet, which has to do with the fiscal implications of the tax legislation that's passed. So we're still working on that, and we'll present that to you at the next meeting if that's not a big problem. What I was asked what to do was just, I had given a lot of presentations on the tax incidence, which is economics speaks for who pays for Hawaii taxes, just at the tax level or at the state level. And I wanted to bring in the federal level because actually most of the redistribution, it occurs at the federal level in the tax code, and also with the American Recovery Program, they added a bunch of new tax breaks that got a lot of attention and increased the progressivity of our tax system. So I just wanted to show this to you really quickly. It'll go by fast, and then we'll be on our way. So again, I just included this for background information. I had shown you this in Who Pays Hawaii's Tax presentation. This is just the idea of like how we came up with our model of who's paying what, right? So what we did was we used a consumer expenditure survey put out by the Census Bureau and or BLS, I'm sorry, and Census Bureau. And we looked at Hawaii and we looked at the different income levels and the different households and who pays what, right? And so this is basically the graph that we've shown you before, right? And it does show you that if you look down here, this is the amount of tax you pay relative to income. And as what we all said is, this is the definition of progressivity, right? So the definition of progressivity is not who pays more taxes in absolute terms. It's that upper income people pay a larger percentage of their income, right? So one thing I did want to highlight here that I did, and I made a mistake, to be frank, in the past is, and when we're looking at individual income, so one of the ideas was we look at the whole tax regime, the tax burden for the whole entire state in unison, right? And so there's a lot of worries that if we just look at the GET has some potential to be regressive in a lot of things, meaning that lower income people spend a bigger percentage of the current income on consumption, right? And one of the big contentions that I made was a lot of this was offset by the individual income rebates and credits. So, and this is definitely true for the lowest. Now, for the second, this was actually a slightly negative number, but that has been removed. And the reason for that has been removed is I caught, or in our calculations, we didn't include the fact that according to Hawaii law, you have to take refundable tax credits before you use your non-refundable tax credits. What that does is that since these people really do not have tax liability to begin with, the EITC, which is non-refundable, it comes in second. So you have the food and tax credit, and then you have the renter's credit on top, and those are refundable. So according to our laws, you have to take that first, and then you take the EITC after this, right? And so basically it means it's harder to take the EITC because they're lower tax burdens, right? So I just wanted to highlight that. The rationale for that legislation is usually for higher income earners that are taking refundable tax credits for non-refundable tax credits. I just wanted to make sure that you guys are aware of that, because that's an important part of allowing lower income people to receive benefits from our tax system. There's two ways to get around that. One is you could change the actual rule where you could take non-refundable tax credits first and then refundable tax credits. The other solution to that issue would be to make the EITC fully refundable, right? So, and because the other,
Could you
Go ahead.
repeat, we take refundable first or we
No,
take the non-refundable first?
I'm sorry, you're forced to take the refundable first and then take the non-refundable, right?
Okay, thanks.
Sorry about that. That was my, yeah, so that's where we are. And so you get this kind of like progressive tax structure like you've seen before, right? Now, and this is, again, I've shown you this, but this is basically a breakdown of the different types of taxes by income group. And please, I'm going through this really quickly because you guys have seen this before, but if you have any questions, let me know. But like what we see here is, you know, this is this tax burden is refunded. This is the individual income tax, so this is negative, and this is largely offsets the GET tax burden, right? And so what's left is, and what I kind of argued before, is actually for lower income individuals, households that do have a car, the motor vehicle tax is probably the biggest tax that lower, you know, people at the bottom of the income distribution pay. And then if you go further up is like, you know, the individual income becomes a larger and larger percentage of your tax burden. And that's exactly what we
Sorry,
see.
I forget, what did you tell us about GET SNAP adjustment?
The GET SNAP adjustment means that like if you, since we do not or cannot place GET on SNAP purchases, that's not included. So I took out, you know, one of the big things is since consumption, like food consumption is even a larger portion of lower income households, like that is not taxed by GET, right? And so I took that out. And so that's the whole SNAP adjustment right there.
Okay, just a note, I am told that SNAP doesn't really cover a household's entire food budget for the period that it's supposed to, so.
And that's right. And I adjust for that, right? So what I did is like, if it said, for example, if it said the household, according to the survey, spends $1,000 on food a year and they receive $400 in SNAP, then I would say 600, they're paying 600 GET on $600 and not the other $400.
Thank you.
Yep. Just to put this in a percent, like I just did this slightly different. This is the absolute term, right? So all this is relative and everything has to get to 100%, except even this gets to 100%, just gets moved down. This is the amount of taxes people in different income quintiles are paying. So like, and this is exactly what we expect, right? So the lowest do not pay very much, and like even the second, not so much, and it goes up and up and up. And you know, the way we know that this is absolute is because here's GET, right? And so if we look at GET, it's, you know, for the top quintile, they're only paying 16.4%, and the lowest is paying 91.9% of all their taxes, right? But if we look in absolute terms, and this is, you know, the highest quintile is paying more in GET. And that makes sense, right? I mean, the people with more disposable income can have spend more, consume more. So that's what it is. Now, I wanted to go back and talk about things at the federal level, right? And the federal level is much more progressive than our tax system, and there's higher levels of refunds, and there's and it's that tax rates are more progressive. So we're going to get to that in a minute. But one of the big things I wanted to talk to you about was what happened in the American Rescue Plan Act, right? A lot of the, if you saw at least at the very beginning when this was passed, it got a lot of attention. These tax credits are just for our temporary, right? So the big question is, will they be extended into law going forward? But they make some big differences. One is with the earned income tax credit. Before, it was mainly for households with young children, right? And if you had kids. Now, what they did is they expanded the refundable tax credit to individuals who don't have kids, right? So that was the first time that they did that, and they changed the eligibility of certain dependents as well. For the child tax credit, before it was $2,000 up to the age of 17 and refundable up to $1,400, and it phased out at 75K. And this is for dual income household. And then what they did is they increases the child credit to $3,000 for a child up to 17 and $3,600 for children under 6. And now the credit is fully refundable, right? So that really increases the money put in people's pockets. Now, what you'll remember, and it's even more extreme in the federal legislation, in the federal tax system more than the state tax system, but like lower income people just generally don't have a very high individual income tax burden, right? And so that's why you really have to make these tax credits non-refundable if they are going to be of value, or they need to be refundable, I'm sorry, if they're going to be of value. I didn't include this in my calculations because you don't really know how much people get for child independent care, but like it is an important adjustment and inclusion in the American Recovery Plan Act, which is, before there was non-refundable tax credit up to $3,000 per dependent for childcare expenses. In this case, it makes them fully refundable and increases the maximum benefit to $4K for one individual and $8K for two dependents. So those are big things. I did not include this in my calculation because I don't know, I wasn't clear about who has childcare or not, but that is a big thing. So let me just show you what the results are. There's both. This is for one dependent and this is for two dependent. The reason I have two charts here is I wanted to highlight how, our tax system is intentionally created to, you get more credits if you have more children and independents, right? So what you'll see here is, this is for one dependent and this is for two dependents, and the total, I'll get to the numbers in a second, but what you see here is the total number of refunds is lower in a one dependent household versus a two dependent household. And that's why I wanted to, so it's very difficult to come up with an average and say, this is exactly what happens in a tax code because everything is so unique. But it is important to highlight certain issues. So from now on, I'm going to just talk about a two dependent household, but you can understand if you're interested in like a household that just has one, it would be here. If they didn't have any dependents, it would be much less because they wouldn't be getting the child tax credit, right? So again, here are all the different income levels. This is just the quintile thresholds reported by the Consumer Expenditure Survey. This is the implicated federal AGI, and this is your federal individual income tax burden, right? So the lowest two quintiles do not even have any impact or don't have any individual income liability, and it increases with time. Now, I do want to highlight this. This is for a joint return in 188,000. So there's actually much higher tax brackets than this at the federal level, as most of you guys know, because you guys are CPAs. So it actually, it gets much more progressive than this as time goes on. But since we're using the Consumer Expenditure Survey and I only have this quintile threshold, this is what I'm looking at. What you saw is like, here's the child tax credit, right? And so what I highlighted before is it was refundable up to $1,400, right? And so this is for two children, this is $2,800, right? And so for these people who had a bigger tax or actually had a tax liability, they got more benefit from it. And then here's the EITC, and oops, I'm sorry again. The EITC generally applies to lower incomes. Now, one of the interesting things about the EITC is tries to incentivize people to work, right? So one of the things that should kind of catch your eye here is the tax credit is actually higher for a household in the second quintile than the first quintile, even though their income is higher. So, and that's that's deliberate design of the earned income tax credit. So this is what you would get in the total Fed tax credit before Joe Biden's stimulus, right? And so, as you can see, it's very, I mean, this is very progressive, right? Meaning that like most of the people in the bottom three quintiles get money back from the government, and it is up the top that actually pay. In the ARPA makes this even more progressive, right? And the reason mainly for the purpose of this analysis is it increases the size of the child tax credit and makes it more refundable. So, and you can see for a family, low-income family, we're basically talking about another $3,000, $3,500 of tax credits and tax rebates. And for here, it's even more, right? So this is a sizable increase in redistribution within our tax code. And it remains to be seen how permanent this will be, but I think it's important to understand. And so one of the things like you guys or people may want to think about when they're thinking about is, Hawaii's tax system is how is that nested within the federal tax system as well. And so that's my thing. And this is kind of like the same graph before. And if you remember, this is the progressive tax graph that I showed before, which is like up and to the right, but it really becomes flattened out compared to our federal tax system. And so most of the redistribution that citizens of Hawaii really experience happen at the level of the federal tax code. And I mean, the state tax code is, well, no doubt really important. It's just the progressivity and the redistribution is much smaller here than in other parts. And you can also see that, this was the Fed and Hawaii combined progressivity line, but like with the passage of the ARPA, it even got more progressive.
Seth, do you know when the ARPA provisions are supposed to expire?
Next tax year.
So they're good only for calendar year 2021?
Yeah, that's what I believe. Mm.
But Seth, if I read your chart right, is it correct to say that even before ARPA, 60% of the country is paying no net federal taxes?
Okay, so you got to be careful about 60% of the country is that you got to be careful about that, right? Because these are households, right? And so 60% of households, but actually more people live in these households than in these households, right? Because there's more, I don't know if I show it up here. Yeah, the people in the number of households tend to be higher up here. So you just got to be careful about saying 60% of the United States. But according to this, yes, if you are in what I would, as an academic, feel more comfortable saying that if you fall within the lower three quintiles of the households, you would not have a tax liability.
That's astonishing to me.
So, yeah.
Well, your example is for a household, 2 adults, 2 dependents, or 2 adults and 1 dependent.
Exactly. And that's a great, thank you for pointing out, Beth. So if you move over here and you just have 1 kid, then you would these people would be having a tax liability. And if they had no dependents, this would go up even more, right? So you just got to be careful about this. This is not 60% of the country. When we're talking about tax code, everything is so specific that you just do it one at a time, and it's really hard to come up and say like, oh, this is 60% of the population. Yeah, so again, this just kind of shows you that this is a family of 3 and this is a family of 4. I didn't include it, but if you know, my guess is if there was no children, it'd be something like this, or something like this, you know. This is I did a similar graph and looking at like percentages and like where does the federal tax burden come from, right? And at looking at Hawaii taxes, total federal tax, and then plus the ARPA addition. And so if you look at there's a little bit of tax, and again, this is mainly the motor vehicle tax down here and the like cigarette and tobacco taxes, and then it increases a little bit, but most like this is for these households, they would receive money back, right? And it gets bigger here. And then you can see it increases with time. This is, I just put this in absolute terms so you get a feel of like the magnitude of the absolute dollars, right? So these people are getting a good amount of money back, and these money, you know, these people are starting to pay money back into the system. So with that, unless you have any, or do you guys have any questions? Nope. Okay. Thank you very much.
It will just be interesting to see whether Congress passes these provisions to make them more permanent, because
Yeah.
it certainly have a big effect on tax liability for people everywhere, but it's here way, of course.
And Seth,
Okay.
these slides will be sent out later, is that right?
Yeah, and they're always, all these slides are always put on the commission's website. So I'll send them out, and then they're going to be on the commission's website as well.
Thank you.
I know that you did this with probably not a whole lot of time to do a whole lot of analysis. Have you been able to look at the characteristics of households in Hawaii and try to figure out exactly how it'll work out for us? How many households are going to be
Oh, like how many people will actually receive it?
Yeah.
I haven't looked at that. That's something I can look at, though, if that's something you're interested in.
Yeah, I think that it is something that would be useful for us to know. Hopefully it becomes permanent, and then it'll make more sense to do it.
So just so I understand, your question is the number of households that would receive in Hawaii that would receive the ARPA, the additional benefits provided by ARPA?
Right. So based on the data that you have, how are those ARPA provisions going to affect us here in Hawaii in terms of the number of households, where they are in the income, the number of individuals in the households also?
Got it.
Great. Thank you. Other comments or questions or requests? Okay, thank you, Seth. The next item on our agenda is discussion of DOTAX compliance operations.
Good morning, Chair. Thank you.
Director?
Yeah, thank you for the opportunity. Before I turn it over to Ted for more technical comments, first of all, I'd like to invite the board to come and visit our operations. Now that the COVID restrictions are lessened, perhaps a field trip to the tax office would be enlightening, and we can set that up for you. Also, during my term as on the Tax Review Commission, we had live meetings. We have a big conference room for you for if you would like, now that you have a travel budget and everything, if you like to have live meetings in my conference room, we can safely distance you guys, and you guys can have a live meeting. And of course, we have the electronics to let the public participate and all that kind of stuff. So, I'd like to welcome you to the tax office, and of course, allow you guys to use the facilities here. I think it'd be really beneficial for you. When you come to our tax department, you're going to find that we actually have 3 main sections. We have what I call the good taxpayer section, our taxpayer services section that services about 94% of the tax returns that comes into, or taxpayers. There are good taxpayers, they're voluntary comply. We bend over backwards to make sure that we provide them with electronic means of paying their taxes, filing their taxes, making sure that we answer their phone calls. I know we're very, very proud that our phone answering rate is like in the high 90%. So of course, there's days, due dates and everything where it drops to like 80 or maybe 75. But other than that, we have a phone center here that answers as many taxpayer questions. We try to make it as easy as we can for our good taxpayers, and to make it, just a good experience for them. Our tax computers are updated now. I heard it's one of the best in the country, so we're quite proud of that. Our next division is for what I call our naughty taxpayers. It's where we go out and we encourage people to voluntarily comply. We have our audit division, both field audit, office audit, and of course our collection divisions. We try to help our taxpayers. I call them naughty taxpayers, but there's situations in life like the pandemic, right, where people need extra help, and I wish we could say we're friendly and nice, but it's not quite that way. we're pretty stern, but we try to get everybody into the voluntary compliance mode. And when you do visit us, we'll show you through these different departments. And our third department, of course, is our taxpayer services department. That's where I sit. I drink coffee most of the day, but tax research, like Dr. Kobe, Ted in our rules department, we have our HR department, and of course we have our computer services in our tax support division. So those are our three major divisions. And I think recently in the paper, you've seen our special enforcements branch, where they do special projects like our vacation rental initiatives. Right now, a lot of people are using vacation rentals instead of hotels. It's quite a big initiative. The hotels are well, there's a trend right now because people would prefer to stay in a private home somewhere where they can stay with their families and feel protected, not even in public areas and everything. So they need to pay their fair share of the room accommodation taxes, of course, their GET taxes in it. And we want to make sure that everybody is complying with our taxes. So, I've changed the model of our department, and I just made it really, really simple. I just said, hey, our job is to protect the revenues of the state. We pride ourselves in doing that. And, we just want to make sure that, everybody, we're trying to push everybody to voluntary compliance because, being PACE, you guys all know it's the cheapest way to collect taxes is for voluntary compliance. For me personally, it's a fairness issue. If one person has to pay a particular type of tax, everybody has, in that particular category should pay the fair amount. If everybody does that, then, I think we'll be in really, really good shape. But again, I welcome you to and I think Seth can set this up, but, I welcome you to use our facilities to kick the tires, look at the department. You can talk to anybody you want. And I have really great employees working for me, and they're pretty dedicated to what they do. So welcome to our department. And with that, Ted, you want to chime in with some technical stuff?
I actually don't have anything prepared, so I'm not. We can talk about anything that the commission wants to talk about, or I guess.
Go ahead.
I'm sorry. Go ahead. Go ahead.
Yeah, just to be clear, I've invited these two gentlemen at your request, and my understanding was that you guys would make most of the questions, and if you had anything in particular, and so they could field responses, right? So it was less of a formal presentation about what they're doing now and more of they'll give you, these guys are the experts on compliance, and I know you guys have had some compliance questions in the past.
So give me the opportunity to at least introduce you to Ted Shirishi. Mr. Ted Shirishi is our rules officer. He's the one that interprets all the legislation and makes the rules. So your tax advisories, your TIRs, and of course your revenue rulings all comes out of Ted's head. So if you have some kind of differences in interpretation, you can rely on Ted to make sure that the state's interest is protected and well reasoned response comes out of his office. So he is our rules officer, and he's a very integral part of the tax compliance aspect of it. So if you do have any hard questions, don't ask me, ask Ted.
Yeah, and just to get you guys going on things is, you know, one thing that I often see is like, why don't you guys just do this tax, or why don't you guys just tax why don't you tax people $500 when they come into the tourists, $500 when they step into Hawaii to pay green fees, right? And so Ted will have a legal response on why that's not possible, or maybe possible, but like these are the types of questions I think there's two great questions for Ted. One is, you know, if you guys have ideas and you want to pass them on like potential things you want to discuss, Ted would talk about like the pros and cons of administration and the legal thing. And then the other thing is, you know, in terms of like the brass tacks of compliance, right? Like, why is it so hard to go over after certain people or certain segments of the economy, and what are the challenges there?
Well, oh, go ahead, Scott, were you raising your hand?
Yeah, thank you. I had the good opportunity to work with Ted for a number of years. You know, your office has provided us at the County of Maui a lot of information as far as compliance for home exemption program. Ted, I guess my question would be is there anything that the counties can help you with? Or are we already doing that for you guys? As far as, for example, we definitely have lists of all those people who do short-term rental, et-cetera. Are you guys taking that information and maybe using it in any favorable way for your compliance section?
Thanks, Scott. I don't know that we've been receiving that data regularly. Actually, let me take one step back, because this question is always asked of me, and the question is exactly that. Like, what information can the Department of Taxation share with the county? What can it receive? So we'll take the easy one first. The department can receive all the information, right? Whether it be from the county, whether it be from just constituent complaints, residents who have issues, we can take in. The reverse, right, is the hard part. The restriction is on what the department can disclose. And so we are able to disclose information to another government agency for tax purposes, but not for land use. Maui is in a unique place because they've kind of tied, right, under you, Scott, tied the real property tax imposition with the use. And so it's a little bit easier or possible to share information with Maui versus the other counties. Would we want that information on a regular basis? Sure, if you have it. I don't know that the other counties are in the same position as you, where they know where each and every vacation rental is. It kind of seems like the opposite, especially in Honolulu. And I don't think, despite several different reports from different people, I don't know that Honolulu is in the same place. So that's something we continue to work on. But sure, yeah, if Maui County can share that, we'd be glad to accept it. We probably wouldn't share the exact results of each of the investigations or examinations or possible assessments, but yeah, please share.
So I have a comment question. So as part of Biden's proposal going forward, he does propose increasing the funding for the IRS by about $80 billion over the next couple of years. So similarly to that, and that's to provide a funding source for the various initiatives in his programs. So similar to that, I mean, is that what if there was like, I hate to say a blank check, but what initiatives are not currently resourced in deal tax? Is there something that you guys would like to pursue that you don't have the resources for, that's existing law that you could enforce? I mean, I think that for me, it's easier to, enforce things that are on the books.
Sure,
Okay, yeah. Ted, can I chime in first and then you can follow
Sure.
up?
go
Okay.
ahead.
So thank you for that particular question. And when it has to do with department budgeting, I guess I'm the guy who's looking at that. No, when I walked into this place last August, we were already 22% down on personnel. So we had 22% vacancies. And I checked the years prior to that, and we were even down from that. Our initial cut in our budget this year, the executive branch took us to another 20%. So we were about 35% down. So when you talk about different initiatives that we would like to, or what funding, because of the lack of funding that we could not pursue, I would say that our department, we're kind of down to what I call the nuts and bolts compliance measures, little things like just non-filers, matching Schedule C data, matching Schedule E data, matching 1099 data. These are not real rocket scientist type of initiatives. We don't even have the funding to cover just the basic initiatives. So, during my tenure, what I'm trying to do is at least educate the legislature, saying, hey, you gotta fund me to a certain minimum, right? So we can at least, before we get to the esoteric cases like internet spending and all this other stuff that we want compliance initiatives on, we want to get basic funding to do our basic work, and I would say we're not at that particular point. So to answer your question, beyond the basic, we're not at the basic compliance initiatives at this particular point. So does that answer your question?
Sure. Yeah, and to kind of further that, I guess it's kind of obvious that, well, I don't know if it is or not, but if you can't get to that, the basic core mission of deal tax, then there's a leakage for tax revenue as it is because of the resource constraints.
Right. Absolutely.
Okay.
And then, we would like to get to the more esoteric cases, right? Your online sellers without physical presence here, both GE tax and income taxes, right? But it doesn't seem like that I'm a good messenger.
Yeah, I mean, that's, as just a comment, I mean, I think that's why, as part of the recommendations that we wanted to pursue, or at least I wanted to pursue in this tax review commission, was to actually fund resourcing for deal tax, because it seems to that point where there's leakage from existing tax law, that instead of spending a whole lot of time chasing things that may or may not turn out, I mean, there is money to be had or funding to be had for compliance work. So there's ROI on funding additional resources for the state, and then as you get to that point, then there's additional ROI for pursuing other things. But I mean, I think you got to get to the baseline first. So that's my comment.
Maria, I think you have your hand up.
Yeah, just a follow up to that. It's in the same theme, same kind of overall topic, but is there an ability to make it really easy or easier maybe for the legislators? Do you have any ability to put specific numbers to this, or at least estimates? For example, legislature, if you gave me X million dollars more, I estimate tax, receipts could go up by 2X or 3X or something like that, to make it seem like a no-brainer to provide the funding. If there's anything where it costs more money to fund than you get in tax revenues, no one's going to want to do that. And if they don't know that trade-off, that ROI, as someone mentioned, then they're going to be less excited about providing that extra funding. So can you make it easy for them like that, or are those estimates too hard?
Murray, we're way ahead of you. This entire department is numbers driven. So I can tell you how much a collector, if you give me one collector, I will give you $2 million. Well, I can even break it down to the level of collectors. If you give me another field auditor, you know, the ROI calculations, since this entire department on their performance matrix is all based on dollars. Yes, we got that information. We've already presented that information. If you were to look in our budget submittal, which is a public document, right? We even say, give us a collector, it'll cost you $50,000. This collector will bring in this much. Give us a field auditor. The field auditor will cost you this much, they'll bring in this amount. You know, the thing is, you know, if we were fully staffed, I couldn't make that claim, because if we were fully staffed and you gave us more people.
Yeah, it's diminishing returns.
Exactly, but we're so far away from that. You know what I mean? I can make bold claims and say, give me a collector, I'll give you $2 million. Give me another collector, I'll give you another $2 million. And in fact, I was bold enough to say, you know, there were some tax initiatives in this last legislative session that yielded a mere $10 million or $7 or even $5 million. I said, hey, don't increase the taxes on the people for whatever particular tax that was, right? Give me 5 more collectors at $250,000 and I'll give you your $7 million. You know, so we're actually at that tipping point in the budgeting regime.
Those numbers, those ROIs don't seem to be moving the legislators, huh?
No, not at all. And I think I made a very bold statement to Beth, and I said, you know, I'm not real sure they want us to collect everything.
Can I just add to that? I think, you know, in all fairness, one piece that's not being considered here is the way our legislative budgeting works. And what I mean by that is this so-called ROI that we're talking about is, and that's true in the sense that we know generally. Well, let me take one step back. Quotas are not allowed by the union. So we can talk about general things, general goals, past performance and such, but we're not allowed to do quotas. So that's one thing that's out by union rules. But that being said, we kind of have an idea of what each position could produce. I think part of the issue, and Isaac, you can probably, you know better than me, but it's how the budget needs to get balanced. And so even though I don't know that if they added, for instance, $5 million worth of payroll staff to our department, I don't know how they could add that back to the revenue, the council on revenues forecast, which sets the basically the ceiling to the executive budget to pay for that. Does that make sense?
So you're saying even if they believe there will be that increased tax receipt, it doesn't influence the council revenue projections. So in terms of
so how that part works is the Constitution says that the executive budget, the ceiling is the council on revenues general fund forecast, unless the legislature can explain a reason why the budget should be greater. And so the most common reason for that budget to be greater is tax increase measures. So it might, I'm just saying part of it might just literally be a mechanical problem of how they would add that back to make the ceiling bigger than the council forecast without that type of a budget. The words in the Hawaii Constitution, I think, allow it. I just don't know how it would happen or how common it is. And so that's kind of what we struggle with. And so I kind of wanted to add to what Seth was talking about earlier, in that the reason we have the income tax credit ordering that we have today is because in the last recession, so that was about a little over 10 years ago, we figured out it was for revenue saving purposes, right? So it was literally so that less would go out. And so now, because of the balanced budget situation, just to undo that, it takes away from the budget. Like there is a cost, and that's kind of how the budget works. And so if, for instance, if there was a law that undid the credit ordering, and that would be, let's say, a 20, 30, 40, $50 million loss in each year, that would need to get covered in the budget. And so that's kind of the mechanical, from the legislative perspective, the mechanical difficulties in undoing these things. And so that's just something to keep in mind. Like from a business perspective, it seems so obvious, right? You spend $50,000, this guy will bring you back $250,000. Why not? I totally get it. And that's kind of something that's probably outside of this commission, but that's probably one consideration in terms of why it's not so simple to just give us whatever we want.
Yeah, and I totally agree with Ted, but for me, it's the fairness issue. I think that's part of your commission mandate. And, is it really fair not to press compliance on some people because of lack of resources?
Sure.
Scott, I think you have your hand up.
Yeah, thank you. Is the 20% thereabouts vacancies because you don't have funding, or the positions are frozen?
Both. They took away the funding first, and then I think in this budget they took away the positions. So we're gonna have to reestablish from scratch. It's just one of those things. Yeah. You lived through it, so you know exactly what I'm talking about.
Yeah, let me just add to that. Outside of that, though, some of the positions here don't require like a skill set, like a tax background or anything like that. Other positions do. So it's also a little bit harder for certain of our areas to find qualified staff, and because obviously then we go back to the whole salary thing. If they're qualified and they have that skill set, would they be here for that price? Or if we get them out of school and we train them, once they're good and their resume's built up, they don't go. And so that's kind of the conundrum. Like it's different in a private sector sense, in that if a company decides to, for instance, invest in an employee's education, training, and so forth, you can have an employment contract, other things that ensure that the company will get some repayment in some form for that outlay. The state doesn't have that. And so that's the other thing that's not outside of this specifically to this commission, but that's kind of the difficulty for the state as a whole. And the sheer number of us government employees and the union situation makes it really hard to move pay comparably. And so, yeah, that's just some extra considerations as to what it is. And so can we get more collectors that require not necessarily a specialized background? Sure. But even if we had more positions to hire, for instance, our field auditors, which is handle our more complicated audits, I don't know that we could hire 30 people tomorrow, even if we had positions at that salary, right? And so, yeah.
Actually, Ted is absolutely right on that. And I did have a discussion with the governor on that. Because of our technical positions, I told him, you just can't find them off the street. You're gonna get these guys that we're gonna have to train for 24 months. And so we shouldn't have a hiring or recruitment freeze, because we have to constantly, recruit and hire, because we have our turnover situation. So Ted is right that it's not like give us money right away. Just don't stop our progress somehow. I don't know how you're going to word that properly, but I think
I know exactly what you do. It's the same thing with the county, so it's absolutely the same. Yeah, I know exactly where you're going to.
Yeah.
Yeah, so I can add a little bit more to that. And so to add the extra piece, the question always comes up. So what does your new computer do for you? And what the computer can do in terms of compliance, since this is a compliance discussion, is try and use data, right, and analytics to try to pick cases that are more likely to be underreported, misreported, something is wrong. The difficulty in tax is that even after that detection, it requires a human to touch it.
That's correct. Yeah.
So in terms of that, like it's really and so just to give you guys a simple example, like, so we send out a notice, hey, we're going to examine you. We think this is wrong. Taxpayers there from that point allowed to respond with an explanation as well as documents. And as far as I know today, I don't know of any AI or anything like that can review these documents and see whether or not it answers the question or properly substantiates what the tax position that was taken on the return. So there's always that human component, even on the simplest matching examination. And so that's what we're kind of focused on, is kind of using the machine to pick cases that are more likely to be incorrectly reported, like there is something wrong, so that the staff resource time is not wasted. And that doesn't, I guess, directly correlate to dollars, especially not enough dollars to move the needle, but that's what we're doing internally within our resources to kind of improve tax administration. And also for the taxpayers, I think it's a lot better and it's a lot more understandable when there is actually something wrong. The state does not pay fees, for instance. And so when we go through a full examination with taxpayer and come to find out they were completely right and we were completely wrong, everybody's, at a wasted resources point. So those are the kind of things that we're trying to reduce. Obviously, it's not perfect, but we're really focused on trying to do things that are fruitful for everyone and not a waste of the taxpayers' time and unreasonable for the taxpayers as well.
So let me chime in with just a real short story. When I first came in here in August, we were doing our vacation rental initiative, and we got approximately for one platform, we got 7,000 leads. So I said, great, send out 7,000 letters. Let's go for it, right? And people like Ted and everybody who has a lot more experience in tax compliance than I do says, whoa, stop. You're not going to send out 7,000 letters. I said, why not? He said, if you send out 7,000 letters, our phone center downstairs is going to explode. I said, really? I go, oh, okay. So how many letters can I send out? And they said, well, let's start out with 200. I said, 200, we got 7,000 leads. At 200, you have lifelong employment for every state worker in my department. But you see, it's things like that. We were resources constrained. We did get 7,000 great leads through the data mining that Ted described, and we should have worked those leads right away. But we have to do them 200 at a time, because it's going to generate the phone calls. From the phone calls, going to generate actual person has to go and work these cases. So that's an example of resources and compliance and the challenges we have here at the department.
In addition to vacation rentals, where else would you prioritize your attention in terms of greatest likelihood of success?
Well, Beth, for me personally, I really, and this is only my own personal view now, I really focus the department going after the bigger companies, the bigger people without physical presence in Hawaii. I mean, to bang the little local guys that these guys, they have to compete doesn't really make sense to me. Although I want fair compliance across the board, right? But to just go after the local guys because they're right here and not go after the big online retailers. So I guess you know who I'm talking about, okay? Statistically, I want you guys to know, and I think I said this to you before, 11, well, it's the total of 12, but one person does have a physical presence in Hawaii. But let's just say 12 people without physical presence in Hawaii makes up 10% of our GET collections. So these guys are huge, obviously, right? And they don't really have a physical presence in Hawaii. But you can imagine the resources that it takes to go after these type of transactions.
Yeah, let me just add to them. So my perspective is a little bit different. I am of the belief that we need to find non-filers. And what I mean by that is people who are completely off the book. And the reason is if we continue to go after people who have filed, we're not necessarily, like that doesn't, and I'm gonna say the term again, move the needle. It doesn't really change the revenue or anything. If this guy was, we come to find out he was misreporting by 5% on his return, that's what it is, right? But if we find a completely new taxpayer who has not been filing at all, that's 100% of his income that we're gonna, be able to get along the way. Also, and I guess going back to Isaac's point about fairness. I mean, otherwise we're just examining and auditing people who filed, right? And they may, and you know, there's a big variety in that. Some people are unintentionally misreporting, and obviously there's people on the other side of that who are intentionally underreporting or not reporting their income. And so that being said, we do have to look at those too, but I'm of the belief that we need to find non-compliant taxpayers that are off the book and add them to our ongoing compliant population of taxpayers to really.
Who are you talking about in terms of businesses or individuals?
So there's some of that, what Isaac's talking about, which is people who have still, despite the fact that there was a federal case that kind of set some parameters in terms of what we can tax across borders. So that's the Wayfair case. I'm sure you've heard about that a million times. Hawaii's law follows that. So there are still, I believe, some taxpayers that are probably on the fringe of that and not necessarily registered or paying. And the other side of that is all the internet-based businesses. And that doesn't mean that you're not here, right? And when Isaac says no physical presence, to me, I look at that as no physical location. They might be here, but they're just doing their business on the internet. And so that's the kind of thing the law is not going to move as quick as the business models move. So that's something we're looking at. So vacation rentals is actually part of that. Vacation rentals are different because they're not easily detectable, right? It's not the same as going to Waikiki and counting the hotels and going back to our database and saying, okay, this building, this is the license, next building, this is the license. And so that's what we're struggling with, but we're getting a little bit better at. So it's the answer to your question, Chair. It's everyone who everyone who is not surface level detectable. And so one area that's really changed, even for the smaller markets, is we don't have those in-person shows and forums and craft fairs and food truck events and types of things that people kind of shifted to Instagram, Facebook, and all these other platforms. And that's not necessarily a lot of revenue, but it's important to get all the industries, all the groups, all the business models compliant. And everybody paying their little piece is what allows us to go forward without tax law increases, right? Actual tax increases. And so that's kind of been my focus, at least, trying to make sure that we're kind of closing the loops as best as possible. So we are, and we don't talk about specific processes, but I can say that we do intend to make our presence in all these different forums and platforms a lot more visible soon.
Whoa, that's provocative, Ted. Right on.
Yeah, just a little bit different. And so, and what Isaac's saying, and so I think you guys know this, you know, less than 1% or about 1% of all returns in tax administration get audited. So we do rely on voluntary compliance. And part of that voluntary compliance is making sure that people are aware that we are monitoring the activity, right? And so great, if you're a compliant taxpayer and whether or not you're looking, you think it's your duty and you pay, great. And so again, there's different variations in terms of risk tolerance. And so that's kind of our job here, is making sure and verifying that people are in the realm of acceptable. And from my perspective, non-filing at all is not acceptable. I'll just say that.
Ted,
Sure.
You mentioned 1%.
Yeah.
Does DOTAX no longer piggyback on what IRS does?
Oh, we do. We still get their adjustments over, and we make corresponding adjustments. But I think even the IRS, I think in their heyday, they're at about 2%, and now I think they're closer to 0.5%. And I think it was mentioned earlier that they're going to increase their budget. But even looking at the Hawaii IRS staff, they, you know, attrition, people retired, people left, they didn't refill. In fact, we don't even have a local liaison anymore. We have a regional liaison.
Right.
So yeah, I don't have the specific numbers in front of me, but if you look at our annual report, you can probably just go back and do the math. So yeah, it's a percent at best, and it kind of is what it is.
You know, Elton, I'll tell you something. I think the processes we use for audit selections and everything is superior to anything that we piggyback with the IRS. And I think across the country, when I talk to my different tax administrators across the country, the state tax office is now becoming stronger than the Internal Revenue Service as far as audit and compliance and selection, because we have more current data The data we're getting off the Internal Revenue Service is a little bit dated. So I don't want to go into specifics on that because these are compliance initiatives. But I would think that the data that we're getting into our tax department now is more current than what we get from the Internal Revenue Service.
I see. I just thought with technology, it's so easy to piggyback on what they have. And I know in the past, a lot of issues are brought up because the IRS has brought it up first.
Right.
So I think how much of your, go ahead.
Go ahead.
I'm sorry.
Go ahead. No, go
What
ahead.
percentage of your budget is dedicated to compliance versus enforcement and collections?
Oh, that's a great question. You know, Elton, I got it. Ted knows I got it all on the wall. Ted, it's all on my wall. And when you come here, I'll tell you the exact numbers. Yeah, right. But you know, I off the top of my head, I know that personnel-wise, we're a $20 million outfit. And $10 million in just costs. So we're a $30 million outfit overall. And I don't know the exact breakdown. I do know it if I stand up and walk over. But yeah, I couldn't tell you exactly how much compliance, but you know, I could get you that information for sure.
Yeah, let me give me 1 second. I can tell you what the let's see. So for our compliance program, and so this is just for discussion purposes for next fiscal year. So this is the budget that just passed. The compliance division, so that would include our auditors as well as our collectors and our district offices. The total budget is about 10 million. So approximately a third.
Yeah.
And just to put that into
Thank you.
perspective, the about 96% of revenue collected by the department is done voluntarily.
Correct.
Right. So we're talking about 4% of our revenue. 4 to 5 is done through compliance.
Yeah, I'm glad you said that.
So
That's a good segue, right? And so that's really what. So again, I'm going to say the term "move the needle." That's really what we're trying to use compliance efforts to get ongoing voluntary compliance. Like the dollars collected from that staff member is not the actual like bigger benefit to the situation, and you know, in terms of tax revenue.
So Seth, based upon what you just said, only 4% are non-filers?
No, what I'm saying is of the money that's brought in, right?
Okay.
Most people, about 95, 96% of the people just send in a check without ever being told to send in a check, right? Like there's the compliance
because they file a
effort,
return. Yeah,
either
okay.
through collections or because they've been audited, right? And like we do not have a good idea of like what is a non-filer, right? Because by definition, if we knew about them, we would probably be letting them know that we would like them to pay taxes.
Okay, I understand now. Thank you.
Just a quick, oh, is someone else about to go?
No, go ahead. Go ahead.
Just a quick question. Earlier, you made the interesting point that with AI and these better computers and stuff, you can probably flag questionable returns or things that maybe had a mistake or underreporting or whatever, but you still need human beings to do actual audits and so forth. And I understand that, but I wonder, I don't know if this is legal, but is there any thought behind using the AI that can flag questionable returns to send a letter to the taxpayer and basically just say, you know, your return has been flagged as, you know, potentially concerning on this particular front or this particular topic or this segment of the tax return, you know, recommend you take another look at it. This is not a notice of being audited, but it's a notice that it's been flagged and may require further investigation. Try to get them to blink and, you know, fix the error, or, you know, almost sort of prompting them to do a voluntary plus up if need be for their taxes.
We actually do that. And so that's kind of our initial contact letter. Yeah, we're like, hey, we noticed some discrepancies. Can you please file an amended return? And
okay, I'm done. Every good idea I have, you guys have already done. So I'm done.
So Ted, is part of that effort matching the gross income on the income tax return and GET return because in the accounting industry, it's rumored that if they don't match, somebody's gonna come knocking on your door.
Again, I won't talk about specifics.
Yeah,
but
okay, I get
yes,
it. Yeah.
Yes, we do match it, but that being said, like there is differences, right? I mean, there's certain tolerances between the gross income reported on each side, but ultimately there's different exemptions and deductions that apply to GE. But yes, that is something we look at pretty carefully.
Well, let me.
Yes, as Murray was alluding
to,
that's the easy find, right?
Yeah. So
in your
yes,
system.
the answer, Elton, is yes. But you and I both know over the years, right? The Internal Revenue Service letters and of course the Hawaii State Tax Collector letters were getting more inaccurate, and and there was a time in our career, we get a letter, we jump on it, the accuracy of that letter is probably 90%. When we Murray, for your suggestion on these letters and stuff, as we start sending out thousands and thousands of more letters and each letter has less consequence, we don't have that attention that people will put these, people in the old days. You remember when Kurt Kawafuchi sent out all those bad letters and people just paid because it was a letter from the Hawaii State Tax Collector, right? And those were like 18,000 erroneous letters that he sent out. But I don't think Murray, I'm really worried about sending out hundreds of thousands of letters, because the seriousness of the letter or the effectiveness of the letter becomes less and less. So we kind of trying to gauge that too.
Yeah, I mean, if you send out for any tiny flag that comes up, I'm assuming this is not a yes or no. There's some sort of a scale where things are maybe wrong, or this one looks really bad. There's probably a really good chance of something being off here. And if you just send the letters on the really big ones and not all of them, maybe that's a solution.
Right. So we do, Murray, when you come down, I'll show you how much letters.
You do that one too, I bet. You do that one as well? Okay,
yeah,
thank you.
We got letters. Boy, you want letters? I can send you letters.
Yeah, even from our real property tax office, when we kind of got a notion and you send something out saying, please submit it by a certain time or we will further investigate, you'd be surprised the number of people who respond.
Yeah.
You'd be surprised how much people actually respond. But the problem is how many staff can handle that many responses.
Yeah.
I remember sending 7,000 condominium letters, and it took my staff, I don't know, people called in sick. It's just like the amount of people that called back was just overwhelming. So, but to that exactly what you say, Murray, I'm pretty sure TED guys get a lot of response from letters. I'm pretty sure.
Yeah, I think that's a risk ranking thing too, because as the cases get more sophisticated, the more taxpayers will respond with resources on their side too. So, it is a judgment call as far as which taxpayers you go after, because it's going to be a resource thing.
Right.
Exactly. And so that
I've got a question. Oh, sorry.
I'm sorry. Go ahead.
Sorry,
So I'll say this: we have different areas that do different types of cases and different levels of complexity. So that's kind of another division and breakdown that we have here too. So obviously the ones that are more matching based and simpler go to a certain group versus things that are more complex and involve more legal theory and that kind of stuff go to another group. So obviously the goals in each of those areas are different.
Got it. Given that voluntary compliance constitutes such a high amount of the state's tax revenues, what's being done in order to incentivize voluntary compliance for non-filers? I know that the obvious choice is to, bring down the book on people who aren't filing, make an example out of them. But has there been any other, novel idea out there to try and incentivize this? Because I think everybody understands that it's the cheapest option if people just come forward and they pay, right?
Absolutely. So there's two answers to that. One is our ongoing voluntary disclosure program. And so that's out there. We have, I believe, a tax information release on it that we recently updated. And just so for everybody's knowledge, A voluntary disclosure means that if you have not been contacted by us before and you owe taxes and that checks out and you haven't been registered, you haven't filed before a certain criteria, then you can come forward, pay the tax. And generally, if you're accepted to the program, we'll waive the penalty, but not the interest. That's one thing, and that's one thing that we have going on here. The other thing discussed, and we have, I know the state did it many years ago, is an amnesty program. I think there's pros and cons to that. A lot of jurisdictions that have done amnesty programs, I guess to some extent regret it, in that people are just waiting for the next program to pay. So it's kind of a double-edged sword. I think if the state really needs the potential cash infusion there, that's something to consider. But obviously, like Isaac said earlier, non-filers are non-filer because we don't know that you exist, right? And so part of that is kind of trying to detect and using new and more innovative methods for audit selection. And some of it is just simply being out there in the real world and understanding what people are doing, buying, you know, what the flow of money looks like. But in terms of like what other programs we have, we don't have anything else. And I don't know that there's anything else out there that people are really doing. I mean, besides obviously looking for them, right?
Yeah, and if I can chime in, Winston, you know, I introduced my taxpayer services branch. You know, they're really empowered to help the taxpayer who voluntarily complies. We bend over backwards. You know, there's a lot, you know, unfortunately, because of legislation, our tax system is pretty complex. There's a lot of errors being made. I fully understand that. Our taxpayer services branch is fully empowered to help these taxpayers who just made errors, you know, or on their return, just to get them correct. And so I guess when it comes to voluntary compliance, my particular philosophy is if you're coming forward and being a good taxpayer, trying your best to comply with our real complex laws, then we're going to bend over backwards for you. But if you're going to be a naughty taxpayer, then you know you'll get treated accordingly, and you get a visit by Ted.
Sorry, let me just add to that, Winston. And so I guess if you look at the question a little bit different, and so there's different, in terms of voluntary compliance, there's the non-filers and those guys who are, you know, completely off the book. But other than that, in terms of what we're doing to try to make complying easier, not necessarily that you're currently not compliant, but those are the kind of things. And so one of the things that we always discuss here is trying to A, simplify forms, and B, simplify our electronic system. So Hawaii Tax Online, and we realize now, so current version of Hawaii Tax Online is a lot more functional. It can do a lot more things. Part of what's, you know, always been said to us since we launched is kind of, it's not necessarily the most user-friendly of applications. And so that's the kind of stuff that we are looking at. And I can say that we do proactively discuss the best way for taxpayers to comply, especially when new tax law changes arise. And so, for instance, like one of the hot topic issues and one piece of legislation that just passed is going to be new informational reporting for real estate investment trusts. So that's going to be our next topic, and it's going to for sure it's going to be a new form. So that's kind of like, for instance, our discussion would start there, right? What's the easiest way to get this information? What's the easiest way for taxpayers to comply? What's the best form that we can get this data so that we can process it, make it usable for the legislature? All of those things come into play into our discussions in terms of how we move forward on things. So thank you for that question, and I hope that answers your question.
No, thank you, Isaac and Ted. That helps a lot. Yeah.
I know that new legislation was passed to increase the conveyance tax on higher end real estate. Now, my understanding, and I could be wrong about this, is that it's not a very straightforward system to identify the transactions and collect the taxes. Like the conveyance people are in Department of Land and Natural Resources. Is that right? And then tax. So, and then do the counties get involved? I'm very confused about that.
Sure. Okay. So the conveyance tax is codified in Title 14 of the Hawaii Revised Statutes. So that's the tax statutes. In the statutes themselves, the director or the director of taxation, but this is before Isaac's time, is allowed statutorily authorized to delegate the duty of collecting the tax to another agency. That was done many moons ago is the LNR, but specifically the Bureau of Conveyance. And so how it works now is that, aside from the exemption situations, when you're going to pay your tax, so you basically fill out your form, take it to the Bureau with your payment, and they accept electronic payment, electronic filing and payment as well now. But you would file there, and by doing that, you would be allowed to record your deed. As far as the county portion goes, so those certificates, so there's Form P64A, that's the conveyance tax certificate. Those certificates are collected by us and provided to the counties, and probably Scott knows better than me, but they use some of that information to determine their property values, the county, for real property tax assessment purposes.
Now, I think, Beth, to answer your question directly, the legislation, I think, Ted, they're talking about is 58. I think that's the one.
I thought, sorry, Chair, I thought you were asking about the process, the procedure by which the tax.
I was interested in the process.
Yeah. And 58 increased the conveyance tax. Ted, correct me now. Increased the conveyance tax for everybody but commercial properties. Is that right?
Right.
Okay.
Residential.
Yeah,
I think that single family, I think that single family residential that qualifies for the homeowners was also preserved, but I gotta double check.
No, I think sections 1 and 2 raised the taxes for everybody, and then section 3 rolled back the taxes to the original rates for commercial property. That's what I think that
Yeah, so the biggest, I guess, point from that bill specifically is the question of why people are asking why only the commercial properties were spared, because there's other, I guess, categories of properties that obviously, whichever category you'd fit in, you hope that you would be spared from the increase as well. But
what's the answer, Ted?
Answer in terms of
why they did it that way?
I have no
Nobody
idea.
knows.
Seems like legislative prerogative.
Yeah, it's legislative prerogative, so don't ask us. Yes, Scott.
Sorry, I'm following council hearing and this meeting at the same time, but Ted, the question that I have for you is, how do you know who's a homeowner?
How do we know who's a?
I thought you mentioned that it's something less for homeowners versus residential. How do you know who's a homeowner?
According to the law, it's the person that qualifies for the homeowner exemption, right?
Oh, Scott, the answer to that is voluntary compliance. They're gonna fill out their P64A and determine their proper rate, and they're gonna pay on that.
That's where most people lie.
Good to know.
Wow,
it's only because when we see the P64 on homeowners and they don't apply for a home exemption, that's our question. It's like, they're not even homeowners.
Yes.
Okay, are there any other questions? The one question I have remaining is, where can we read more about compliance issues for DOE tax? I seem to recall seeing it, although I never paid much attention, in your annual report, and I can't remember whether it was in the report that was done for the last TRC.
That's correct. As far as statistics and those kind of things, and general program descriptions, you'll find, and we actually have a list of tax appeal cases as well in the annual report. Again, we don't talk about specifics. Like, we wouldn't say, hey, we're matching this data set with that data set, and that's how we're going to find our support. So we don't obviously go there, but those kind of things in terms of how many examinations, how many appeals, dollars collected in collections, dollars collected by audit, all that's in our annual report. Sure.
And Beth, I would also like you guys to read our budget submittal for this year. So, because I really laid out the budgeting plight of our department.
Okay, well, thank you very much. Let's go on now to the end of our agenda and talk about scheduling the next meeting. And as we get there, I want to bring up the permitted interaction groups. Reading through the outline reminded me that it does take a lot of time to get through that process. So we need to identify a permitted action group, what it's going to be doing, who's going to be doing it, what their responsibilities are. Then at the next meeting, they report back to the commission as a whole. And then at the third meeting, there's an opportunity to discuss further and make a decision. So I think we need to sort of be a little bit more urgent about moving forward. And one of the items that we were planning to address soon was the carbon tax issue, which we heard a presentation on last time. So I'd like to ask Murray to, I'd like to ask Murray if he'd like to volunteer.
Well, I think it's been no secret. I'm interested in looking at the carbon tax in more detail. I guess a couple things I don't understand, since I've never done a permitted permitted interaction group.
Interaction.
Is it?
Just call it a pig.
Pig. Well, I've had some experience with the pigs, but not that kind of pig. Are they normally done? So I guess I'm conscious of the fact that while I'm personally, as just one commissioner, interested in looking at the carbon tax more closely, are they generally done on topics the commission has in fact selected for focus in their report, or are they done to help figure out what topics the commission should address in their reports? Because if it's something that's really super involved and time consuming, and then you do one and then you don't even bring up that topic in the report, it feels like, so I'm interested. I'm just trying to figure out when the right time to do the pig is, and do you have to have a report for each meeting or the next meeting, and how that timing works? Do you understand my question?
I think so. Well, correct me if I'm wrong. I was under the impression that the major areas that we've identified that we want to scrutinize for our report, including the carbon tax, that we would create a pig for each of them to do a deeper dive, because in a pig we can have whichever members are most interested in that topic, as well as members from the staff or experts out in the community join us for those discussions.
Yeah, I think it's worth doing. I mean, I guess my related question is, if we think that to address something like a carbon tax, we're going to need to use some of those consultant dollars to get maybe McKenna to do some follow-on research related to her original study. Is that something you include in the pig, or is that an outcome of the pig to go back to the consultant? Again, I've never done one, so I'm just trying to figure out the timing. I'm certainly interested.
I think that would be something that the pig can discuss what additional information needs to be gathered to make a recommendation. And that if the pig recommends that we invest some of that money for expertise from McKenna or from somebody else, that would be a recommendation that the pig brings back for discussion by the group as a whole.
Okay.
Okay, Chair, if I could ask a question.
Please.
Seth, when I was on the tax review commissions, we did pigs and subcommittees. And I forgot the rules for both, but they were different and they had different meanings under the Sunshine Law. Seth, are you familiar with that?
I'm not. I can look into that for you guys though.
Okay, thank you.
Yeah, I am not aware of subcommittees, so that would be interesting to see how that might work out too.
My recollection is subcommittees are still subject to all the sunshine laws, whereas the pigs are, because you're not really deliberating on official business, you're just finding information and you're bringing it back, right? It's less, there's less scrutiny, but I could be wrong. That's my understanding.
So long story short, I'm definitely interested. I need to go back and review the pig. Since we didn't talk about it today, I thought it would be fresh on my mind that, if we had that presentation on how pigs work and what the rules are and everything else, I need to go back and review that. But I'm definitely interested in potentially, whatever the term is, hosting or helping out with a pig for carbon tax.
And it's just it requires 3 meetings to do anything, right? So 3 meetings to even, so if you were to go investigate, decide you wanted to, needed money for a consultant, you would come back, share the findings, and you'd have to wait to the next meeting for the commission to vote on whether to approve that funding. So my recommendation is do as much as you guys can in their initial meeting, because every time you make an additional request, right, you have to have another 3 meetings. So at this rate, that's, unless you guys have special meetings, that's, if you get one thing, it's 3 months, it's 6 months versus 3 months, even if you guys are flying through everything, right?
I guess I'm not clear how the 3 meetings thing works.
So if you look at the document, so the first meeting is you guys decide to have a pig, right? And then whenever the second meeting is, you come and you present the findings. And then it's not until the third that you can actually vote or deliberate on anything that any information the pig provides.
Oh,
right?
so, and that timeline would assume that we would have to have the pig meeting or meetings between now and the next monthly TRC meeting to even get on that timeline.
Yeah, and that has to be official meeting, right? So you guys can have more than one meeting a month.
Yeah.
And if you just want to have a quick meeting to do this, that is possible, right? But you just gotta be very, especially since you guys are meeting at once a month, if it takes 3 times to do anything, that's 3 months, right? And so then you're already at, you're already August or September, and my understanding, the reports due 20 days before the legislature, which is, you guys talk about the beginning of January 2022, but it's actually December 2021, right?
Yeah.
So you guys got to be really on it. And if you do one, I would encourage one of you guys to think about it exactly, so you know exactly what you need to figure it out. And then even if you have the consultant, you don't need a pig to decide on a consultant for information that will be delivered to the pig group, because you could decide on the consultant right now or you couldn't decide right now. You would have to put it on the agenda and decide it on it next, or have to be official agenda, and you guys could decide on it at the next meeting, right? Just to approve the funding.
Okay.
It just takes time, right?
Yeah.
That's the only thing I'm pushing it.
Yeah. So it seems like even though it's going to take a long time and we're going to have to think about some additional meetings, but today, at the very least, we should agree to have a pig to talk about the carbon tax issue. And if Murray is willing to head that up, and if anybody else will identify themselves as interested in joining him, then Murray gets to decide where and how and when these meetings are going to take place.
I think that was the question for the DOTAX vote.
Yeah,
right?
that was a
I'm sorry.
Yeah. So what I asked was if Murray and a subgroup of members want to join this pig and move forward on carbon tax, then this group gets to decide how and when and where and okay.
Yeah.
And their purpose is to identify what aspects we need more information about, and make recommendations to the full group.
Yes.
On the carbon tax.
Yes, but you would need to have, when you guys vote on whether to create the pig or not, all right, that's an agenda item, and it would be very important to identify the entire scope of the pig when you are creating the pig. Right, so you don't need to know exactly what it's going to know, but if it's just about carbon tax, you say it's about carbon tax, but he's not allowed to, they're not allowed to start doing things on GET and individual income and and what are they going to produce, right? So it's,
Are you saying are you saying that we cannot vote to create a pig today because it wasn't on today's agenda?
correct.
Oh boy.
Oh,
Well,
we can't?
I don't think so. I mean, we can consult, but you know, if you look at, in order to, I'm just reading what the AG shared with us, right? In order for a board to take action on a matter investigated by a pig, 3 meetings must occur. At the first meeting of the full board, the scope of the investigation, scope of each member's authority are defined, and the pig may then conduct an investigation. Since you guys cannot hold a vote to create a pig without having an agenda item.
So we missed a meeting effectively then because it
Yep.
wasn't on the agenda.
Yep.
Bummer. Well, at the
Okay,
very least, we should put it on the agenda for next time.
right, and so I'm wondering, do we need to meet again? We would ordinarily be meeting on June 16th, I think. I think we ought to meet sooner to at least identify this pig.
Yeah, especially if it's a quick meeting. I got no objection to that. I'm happy to have a meeting sooner.
Same for me.
Okay, why don't we do that then? And I'm wondering whether staff can poll us to find a time when the majority of us can be present so we can move forward with this.
It's a lot easier. My experience is it's a lot easier when all 6, or you know, Kate's not here, but it's a lot easier for you guys to time. If you just wanted to find a time for 15 minutes to do a thing, it's much easier to do it now versus me sending out, or our staff sending out a bunch of different emails and figuring out what doesn't work.
Okay. Okay, can everybody get access to your calendars right now?
Got mine up.
Start shooting.
Is it possible maybe to meet next Wednesday?
I'll be on the road next Wednesday, unless
Okay.
it was in the, yeah, it would have to be pretty late in the afternoon, unfortunately.
How about Monday or Tuesday next week?
You need at least 6 days to have from when you
okay.
announce the agenda. So the earliest you could have it is, it's 6 calendar days, right? So 1, 2, 3, 4, 5. The earliest you guys can have it is the 25th.
I have a fair amount of availability on the 25th, if that's possible.
I'm open.
I'm available too.
Yeah, me too.
I can make myself
Depending on what
available.
time.
Yeah, same here.
What? How about would noon work?
Yeah.
I can do 1 o'clock or later. I can't do noon, unfortunately.
Okay, let's make it at 1 o'clock.
Fine with me.
1 o'clock works.
Okay.
1 o'clock on the
Yeah.
25th.
And
How
we're happy to provide the support. We do have the Council on Revenues meeting at 2 p.m. on the 25th.
Should be
So we can do that, but we'd only commit to like supporting you guys for about 15 minutes, right? Because then we have to get ready for the Council on Revenues meeting. So we could do it at 1 p.m. on the 25th. With the understanding that, you know, we have to support the next board meeting the following.
If our only item of, if the
Yeah.
only agenda item is to agree to put this pig together, I think we can do that in 15
Okay.
minutes.
Great. Just want to put it out there.
And Seth, since it sounds like I need to do a little bit of homework on pigs, can you remind me, was it you or one of your other people that sent out the email with the pig document?
It was Roderick.
Roderick.
It was Roderick.
All right, I'll go look for it.
And so we can get that agenda out today, so we'll meet the compliance, meet the 25th. One of you guys should have a pretty well thought out idea about, you know, read over the document, and there it asks you to explicitly state, you know, what the pig is for and everything. So somebody has to prepare all that document for all that documentation. I don't think it's extensive, but at least somebody has to put some thought into it before the next meeting. So you guys can
Murray,
vote on it.
it was sent to you on May 13th.
Yeah, I'll dig it up. Thanks. I just have probably, like most of us, have a massive email backlog here. So thank you.
Murray, do you have time to outline what the expectations are for this pig?
Yeah, I can. So I would read through the document, put together some ideas, and just discuss it next week at that meeting. Is that how it works?
What we need to do is review what the pig is going to be doing and then take a vote that we are commissioning this pig to do it.
Okay.
And I think the little memo that you'll find does identify what the details need to be.
Okay, so I'll read that in detail, and then Seth, just one last question, because you mentioned that you know, if we decided to spend some consultant money on some follow-up research related to that, that's something that does not necessarily require the pig. We could do that out of cycle, just based on a meeting, and just bring it up in a meeting and vote on it. Yeah.
I believe so, yeah. You just,
So
but
like
it has to put on the agenda, right?
Yes,
So
you have to put it on the
everything has to
agenda.
be put on the agenda, yeah.
Got it. Okay. Yeah, I'll read through the pig document and I'll put together some thoughts on how to do that.
Great. Okay, well, thank you very much, everybody. And with that, it's 1:46 and I am, oh, yeah, Scott.
Are we still on for the 16th? Is that correct? Of June?
Oh, that's a good point. Yes, does everybody have that on your calendar? I do.
Okay, are we taking up director's invitation to do it in Honolulu, or are we still doing it web?
You know what? Let's do the next one on the web and see if we can get together starting in July in person, or at least aim for July for our first in-person meeting.
Besides, I've heard those dough tax guys empty your pockets right when you walk in the door. So you just gotta watch out for those guys.
That's for sure.
I'm just even scared to make a joke about that.
I know. I said that. I'm like, oh, this is being recorded. So
Yeah, I want to make a joke, but I will not.
Yeah, it's probably more risky for you to make the joke than me.
Okay, anything else today? If not, now it's 1:47 and let's call this meeting to an end. We're adjourned. Thank you.
Thank you.
Thank
Thanks,
you.
everyone.
Thanks, everybody.
Bye.
Bye.
Bye-bye.